What's up, everybody? How are we doing today? I am not doing very good. I had a very bad day trading today. As you can see by this chart, I tried to go long and it dumped. The market dumped in the morning and it recovered very, very strongly later in the day. So what we're going to talk about in this video is what I did wrong, what I did right, which is a little bit. I was right that we did want to be long. I just was too early. I traded before some news. So yeah, we're going to get into all this. We're going to unpack it. But first we're going to review the film, and then we're going to talk about some of the broader things, a change I'm making in my plan to avoid this type of catastrophe going forward. So yeah, guys, welcome back to the channel. If you've been following my channel, you know I had one of my best days in months yesterday, and then the days before my best days, so 2 and 3 days ago, were tilts, catastrophes. So I've had catastrophe, best day ever, another catastrophe. And in all this stuff, in all this, we can learn a lot. But my tape is rolling. I got to talk about this tape first. So what happened here, I took some longs. I saw these. I came into the market biased, very bullish. We had gapped up. The overnight price action looked very bullish. So yeah, I was stopped out because my stop hit below. My stop was hit below the that 15-minute candle. I should have waited for that first 15-minute candle to fully form, and then I should have gone to my pre-market checklist, wrote that down, that objective data point down, and made the decision that, okay, my bias is bullish, the thing I'm coming into the market with, the way I think it should go, but this objective data point goes against that. And then that fourth candle on the 5-minute chart in the bottom right, that's a very bearish candle. Probably should have just sold out there, because what's happening now is the market is going against what I think is going to happen. And my profit and loss statement just came up. I just lost a lot of money. A lot of money. A lot more money than I should have lost. I'm still adding to my positions, and I'm adding into basically a bad idea, a bad thesis, and it bites my ass, and I lose a lot more money than I should have lost. And this is why I created my tripwire rules the other day, which if we have 2 losses, we stop trading. The news flash is I didn't stop. I violated my tripwire rules. But I still think just having them in the front of my mind, even though I did consciously choose to violate them, I do think just having those rules helped. But how can we make the right decision and go with the market? So another important thing that I ignored today is the 8 a.m. news. There's 8 a.m. news today, Mountain Time, 10 a.m. Eastern Time, that is very significant. And I'm lowering my stop losses. This is just dumb. I think I do the right thing and move them back up. Yeah, I moved them back up, luckily. Thank God. But yeah, we should be bearish now. Like, after that last candle, we should be, or if not bearish, because I'm admitting I am being affected by hindsight bias because of what happened. If not bearish, we should at least not be trading, because our objective data points are saying to be short. And we have a news bar. It's like the worst consumer. I forget. I can't even remember. Consumer something. Sentiment. Yeah, consumer sentiment. Worst consumer sentiment in 3 years, apparently. But kind of an erratic bar, right? And looking at the hourly, we're in an uptrend, and it looks like we should probably hold. And my God, I wish I got long here and I was able to recoup like a quarter of my losses I sold out. But my God, guys, like if I would have just got along at the bottom of this and just held all day, or just another hour and a half, I would have made like 200 points or something crazy. Like my long bias in the long term, even on a day-to-day basis, it's like that Warren Buffett quote: in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. And even on a day-to-day basis, breaking that down to a microcosm, like the news came out, the algorithms saw this bad news and they sold way off. But we're in an uptrend. It's oversold. Um, so it's we're in an uptrend. The market was oversold. And we already had the bullish thesis. It makes sense to, at the bottom of this, treat this just like a pullback. Look at the 15-minute chart. Let's treat it like a pullback. Let's get long. It's confusing because it was so bearish this morning, but being long, I really is still the right thing. I think just because like the market has been bullish. Now, at this point, it's looking pretty damn bearish with those wicks on the daily chart. There's 3 big wicks to the upside. So I wouldn't be that. At this point, it doesn't make sense to be that bullish. But I still think, with the MACD on the hourly, like crossing to the upside, with the bullish thesis we had going into the day, and also just this news bar being so erratic, it makes sense to get long. So, talking about going back, changing subjects a little bit to what happened at the start. Later in this video, I'm going to share my, I'm going to share like the change I made in my pre-market checklist that will help me be better and avoid this type of mistake, basically. I need to avoid this type of mistake. Okay? I can't size up. Like the time to size up. Here's the time to size up. This is, if you take away anything from this video, and to my future self, to you, Peter, when you're watching this video in the future, because you need to come back and rewatch this video and review it, the time to size up. Today, you were biased to the upside. So let's talk about yesterday, your best day in months. You were biased to the upside. And the objective data points, the price action on the 15-minute chart, which is the most important chart for intraday trading for me. It's what I structure my plan around. The 15-minute chart, the objective data points were bullish, and my bias was bullish. So I sized up, and I had a very good day. Today, I came into the market. Expectation was very, very, very bullish. I was very optimistic that the market was going to go up today. Or that was my expectation, at least. I was right. The way it happened, I didn't execute right. So I was biased to the upside. Which, by the way, just tangent, looking at the chart right now, that 15-minute chart looking very bullish. I should have got long there. 2 contracts, stop underneath the 15-minute, target, I don't know, days high, target the area where it breaks down. But yeah, I should have got long there. That was a mistake to not get long there. I was pissed because I tried to get long at the bottom of bar 15 and failed twice. And oh my God, that's like the best expected value point to join the whole day. And I tried to get long, but I just failed. But you have to re-enter. I should have waited for the 15-minute bar to close probably. Oh well. Lesson learned. Trade the 15-minute chart, and look, that's already a 1R gain that just happened in 5 minutes. But fuck, where was I? Oh, yes. So I was talking about how I already said the expectation, how yesterday I had the expectation and the objective data points both aligned to size up and get big. Well, today I had this very bullish expectation. The off hours, the Globex pre-market overnight time frame looked very bullish to me. We had gapped up. We were coming out of 2 days of doji consolidation, like a flag pattern on the daily chart in the top left. It seemed very bullish, but the objective data points, the price action, the 8 a.m. news that I should not have traded before, it was looking bearish. So at that point, I should just not trade. And here on the chart, I'm taking dumb, stupid counter trend scalps because I think, oh, it's the bears are going to be in control today. Blah blah blah. I'm at least using small size. I'm doing dumb shit because I'm kind of tilted, but I'm at least using small size. So yeah, I already explained why. Like the time to get big. I should not have got big today. I used 9 contracts on my second trade, trying like overall, um, and I shouldn't have done that because the objective data points, which is the most important thing, the price action happening right now in front of you is the most important thing. I ignored that, and you can't ignore that. That's the most important thing. If your bias, your expectation, and the price action, the objective data points align, that's when you get big. That's what I did yesterday, and that's why I had my best day in months. If the price action is going against what your expectation is, you need to pause and you need to step away and you need to reconsider or take a break or walk away or set a timer or do a hobby. You have to do something else. You have to do something else. Okay, so this video is going to wrap up soon, and then I'll be able to show my oh my gosh, just looking at this price, then I'll be able to show my guidelines. But this price action, it goes so much higher too. Like I'm recording this just over 3 hours into the market being open, so we're close to being halfway through the day. So who the hell knows what's going to happen the next half of the day? I mean, maybe there will be a correction. It'll come back down. Maybe it'll just range. I mean, I think we've definitely seen most of the crazy volatility, and I mean, there's enough price action that I should make my video. Like, I don't need to wait for the rest of the day. I want to get this video out. Yeah, such a unfortunate. I mean, look at that 1 hour chart in the top middle. All right, so that's the end of the video, guys. Yeah, here is, the chart as it stands now of me recording this video. I want to go ahead and drop another image in, so you guys will be seeing this now, and I am now just seeing it on my own. So this circled bit is what I just added to my pre-market checklist. So this is my pre-market checklist. I haven't talked about this publicly yet, but this is a very important document to my trading. You've seen it in my screen maybe if you watch the channel, but this is my first time really talking about it. So the top box, I answer this before I trade. I just said, think about what way you should trade. Trade with the market according to your setups, not when you are ready. And I have those 3 questions, Market gapped up, down, 2. Market is where in yesterday's range. Your hunch, what way looks like the right way to trade. Today, it was very bullish. Market gapped up to the top of yesterday's range. The after hours time looked good, and my hunch was bullish. However, then we get to the next box where we analyze the objective data points, the first 5-minute candle, the first 15-minute candle, the 7 to 8 a.m. candle. This is where we look at the objective data points, which are more important than my hunch. My hunch is important, and my hunch can be a signal to like really size up and on those days where it aligns with the objective data points. But the hunch is just that, a hunch. It's not objective data points. We need to trade off the objective data points. So today, the objective data points, they were not optimal at the start. It's okay to take that one trade. Like I think my first trade on bar 3, that's acceptable, because that looks kind of bullish. It's basically the exact setup I took the day before. But that candle that stopped us out, candle 3, which you can't really even see in this picture because it's so covered up by my buy orders, that candle is not a good candle to buy on. After we got stopped out there, that's when we have to say, okay, we're stopped out on our first trade. We're down 1R, $100-something. I should reconsider. I want to be long today, but I need to wait for a long signal. And bar 4 was not a long signal. It's a bearish doji. Bar 5 is not a long signal. It's a bearish doji. Bar 6 you cannot really see because it's so covered up. But I'm opening my chart right now, and that is also a bearish doji. Even bar 6, I'm okay. I'm not opposed to trying to take a trade on that. But we have the 8 a.m. news that should keep us out. We should avoid trading because of that 8 a.m. news, or just wait. And then, or we should have got short. We should have just gone against our hunch, which is very hard to do, and maybe just don't trade. But we should have said, okay, this does not look good. And then we get that bar 7, the very big sell-off bar. We say, okay, this is a crazy bar. That looks pretty erratic. What now? I'm going to walk away, set a timer. You come back, bar 12, bar 13, bar 14. Looks pretty good. Now, it doesn't look great. It's not, because none of that is bullish confirmation. Bar 11 is kind of a bullish confirmation, but we want to wait after that much of a downtrend for at least, like, we want to wait for another bullish confirmation. Well, bar 15, in the close of that 15-minute bar, the first bullish 15-minute bar on the entire day, bar 5 on the 15-minute chart, that bullish doji followed, which comes after 2 candles with wicks at the bottom showing there's some buying pressure there. That third candle, 15-minute candle, and bar 15, well, there's our signal to get long. And there's no way my take profit would have been as high as the market went. I mean, it went over 200 points up. But maybe I would have had a runner on, and maybe I would have kept buying. I don't know. It's really hard because this price action is so volatile. But yeah, the big takeaway to avoid this type of outcome in the future is being patient and just listening to the objective data points. The objective data points are the most important thing. Trying to think here. The hunch is important, but the hunch is an emotion. And trading based off emotion is how you lose. All your catastrophic losses come from trading off emotion. So, hunches, you need emotion. That's how you make decision. In studies where people have traumatic brain injury, where the parts of their emotional regulation are turned off, they really struggle to make decisions. So you need emotion. But you can't have emotion dictate and control. It needs to be like a controlled fire. It can be important as a guide when to size up, but it can't be the guide, or else the fire gets too big and it burns down everything and destroys you. So I'm pausing here because I'm thinking. I missed out today, and it sucks. And I was right to be bullish. I just didn't anticipate a 100 or a 200 point drop before I should get bullish. And I certainly didn't anticipate after a 200 point drop to get a 250 point rally. And who knows what's going to happen the rest of the day. Maybe it'll go higher. But I'm done. I blew most of my gains from yesterday. Yesterday was a huge day for me and for this channel. And I was so pumped. And today, going into the market before it opened, I was so excited. I thought, we're going to do it again. It's looking so bullish. But that's that emotion. The objective data points didn't align. They were saying get bearish, or they were at least saying wait. We didn't have the confirmation we needed. And, yeah. I mean, who knows? You know, after that news, if it was bullish, maybe I'd be making a completely different video right now. Maybe I would be making a video about how, maybe I'd make a video about, you know, how great a day it was today, how I had another career day. But that wouldn't be good, because I would be tricking myself. I'd be tricking myself saying I did the right thing, which buying there with the size I did, the poor risk management, was not the right thing. I'm not totally opposed to trying the longs there. I'm not. I really am not. It's just the size at which I did, and I should have been more patient, I think. I should have been more patient. So this has been a helpful video journal. It sucks a lot. It's embarrassing, but I'm still optimistic, guys. Long term, big picture, I'm never giving up. I'm never giving up on this. It's a dream I've had since for over 2.5 years. And when I decided to go on this journey, I said I'm never giving up. I'm going to be persistent, and I'm never going to quit. Because I believe if you stick with something and you never quit, you can be successful. And you need to not use too much money. You need to not use too much money until you know what you're doing. And I've used a lot of money. And I've had some big winners like yesterday, but I've had a lot more big losers like today and Friday. and just look at my channel, then I have had winners. And I believe one day it's going to be the opposite. I believe I'll have way more big winner days than I will big loser days. But I need to listen to the objective data points. I need to only go big on the size when the expectation and the objective data points are there. I need to not keep buying after buying losers. So what's going to happen tomorrow? I think tomorrow, because I kind of went until today, I think I need to take tomorrow off as punishment, as sort of a punishment for what I did today, but also just as a tripwire. I don't want to. Usually, when I have a day like today, the day after is also catastrophic, or even worse. Last week I went until Thursday, and Friday I had worst day in months. Monday I got lucky. I got very lucky yesterday. I acknowledge that. Like, it happened. My video or my expectation happened to align with the price action, even though yesterday for a lot of people was a shit day. It was a choppy day, but for me, I got lucky. It worked out for me. Today, much more opportunity today. Much more opportunity to make money, but I squandered it. It's much more volatile. Getting long at bar 15, bar 16, that would have been really basing it off the 15-minute chart. The market is efficient. I think it's going to fix that big sell-off. Maybe it overcorrected. Or maybe it wanted to make that big move up, but it needed a opposite move to trigger it. I don't know. I'm going to stop talking now. I mean, I've rambled enough. This video is for me more than it is for you guys. I mean, anyone watching, a very low percentage of viewers actually watch the whole video, so if you do watch the whole video, I appreciate it, and I really hope that you comment and just to help the channel. But I really hope you comment just to give advice and give me your opinion and your feedback and your criticism, because I like constructive criticism, because I want to grow and be better. And I've gotten a lot of really great feedback and advice from this channel. I mean, this channel has helped me grow and be better, because it forces I have to come on here after a day like today and make this video about what a failure I was and talk about what I need to do better. So this is my longest rant in a really long time. This is the most interesting my trading has been in a while. I mean, the dramatic swings up and down are pretty wild. But I just need to be objective. And I'm going to start, I used to edit out my pre-market checklist a lot because I did it was a distraction from the charts. But I'll start leaving it in my videos just so people can be aware of it, I guess. And people can see what I'm thinking, because I write down what I'm thinking a lot, and this failure today, there's a lot of lessons here. I'm going to come back to this video and watch it several times and learn a lot, and probably be pissed at myself for all my rambling. But this is raw. It's just my reaction. And it's not the most clear, cohesive, far from it. But it's my thought process. And that's what this channel is about, is just recording my thought process and my evolution as a trader. And one day, 2, 3, 4 years from now, I want to be able to look back at these videos and remember what it's like, and I'll have it on video, and I'll probably be embarrassed, maybe, or because maybe these videos are immature, but it's just what I am and what I'm going through, and yeah, it's just my journey, and I'm documenting it. So, man, this is my longest video in a long time. I've been talking a lot. I'm sleep deprived, so that like maybe that's certainly, I think, probably an impact on my bad performance today. But yeah, we will we'll see. All right, I gotta go. I got some stuff I gotta do. Appreciate you watching, and I hope everybody else had a better day than me. And I will see you at the next one. Peace.